The Bank of England has cut interest rates by a quarter point as policymakers respond to signs of economic slowdown. However, the central bank remains cautious about further moves, citing concerns over inflation and global economic uncertainty. Meanwhile, the European Central Bank has already lowered borrowing costs 5 times since June, with at least 3 more cuts expected this year. ECB board member Piero Capillon says that inflation is nearing the 2% target, leaving room for further easing. But with energy prices rising and global trade tensions mounting, the ECB is avoiding firm commitments on future rate decisions. Global trade tensions are a growing risk for Europe. China, which accounts for 35% of global manufacturing, could redirect its exports to Europe at lower prices, impacting local industries and inflation. According to Peterson Institute for International Economics, while the US growth will take a hit, Europe could face even greater economic pressure. Cipollone warns that a full trade war under the US administration could disrupt global supply chains and weaken European exports. But he downplays the immediate impact on corporate margins and currency valuations. Despite trade tensions and inflation risks, the ECB official remains optimistic about the Eurozone's economic outlook. Inflation rose to 2.5% last month, but is expected to return to 2% by summer. Labour markets remain strong, consumption is picking up, and construction sector is showing resilience. The ECB's rate cuts are gradually feeding through the economy, and even the struggling industrial sector is stabilizing after 2 years of recession. While growth remains weak, Cipollone does not expect a Eurozone recession, maintaining that economic fundamentals remain intact despite global uncertainties.